In this video, I'm going to deal with worst case scenario, okay? If you are a high-end financial advisor, we're going to talk about worst case scenario when it comes to fiduciary responsibility. Now, before you turn this video off because you're thinking to yourself, you're in a broker-dealer or some environment where maybe you are not held to a fiduciary standard, I encourage you to watch this because it's about clients suing advisors, and it's something that we all should think about. Recently, I've been doing a series of webinars on digital assets, specifically Bitcoin, and how the industry has taken a stance of being dismissive and or skeptical to the point of just not knowing much of anything about the topic. In other videos, looking at data, which implies that over 90% of the financial services industry has little or no basic knowledge about Bitcoin. And yet, Bitcoin is an asset class that claims to be what the industry has always said that it's looking for. So in the financial services industry, I've been doing this 40 years, and we've always thought on the investment management side, some clients are nervous about having their assets in an asset that fluctuates because of day-to-day movements in price. Historically, we've created portfolios with other assets like stocks and bonds, something that could balance the portfolio. Hopefully, when stocks are down, the other assets are up. So what we really were looking for and what the industry has claimed we always needed was a purely uncorrelated asset class, something that is nothing to do with equities, that actually does cycle independently from the equity markets. At least that's what we claimed. Back in January of 2009, Bitcoin was born. All right, I grant you, I don't beat myself up too much for not knowing about Bitcoin for that first 4 years. Bitcoin is measured in 4-year, what they call epochs. So the first epoch, which is 2009, 10, 11, and 12, it was a baby. It was an infant. It didn't even have any value for a little while, not even a penny. But then that got changed when value was transferred across the network. And ultimately, the first transaction was somebody having a pizza delivered for Bitcoin. And that is called Pizza Day in the Bitcoin world, and it's celebrated even today. But that represented that Bitcoin actually can transfer value. And it went from just pennies per Bitcoin up to where it is now, which is 6 figures per Bitcoin. The point I'm getting at is we have an asset class that is not correlated with the equity markets, but has behaved in the last 16 years at times as though it trades like a tech stock. There are reasons for that. My personal analysis of this is that Bitcoin is a technology, and people who are interested in technology stocks and equities, they trade it like a tech stock. It's not a tech stock. It's a Bitcoin network. It's money, and it's being traded on exchanges like a foreign exchange market. So if you think of Bitcoin more the way the IRS and the regulators view Bitcoin, it's more of a commodity. When you're first discovering Bitcoin, I would advise you to think of it as digital gold. And if you think of it that way, it makes more sense. Now, when I was growing up, my stepfather worked for what was then called Chase Manhattan Bank. He worked on the foreign exchange desk. So I was very familiar with foreign exchange, and I knew that the US dollar versus other currencies around the world can be quite volatile. And for me, thinking of Bitcoin as a currency, which it is money, helped me understand it. But whether you think of it as a currency or think of it as money, it is an actually uncorrelated asset to equities. It may at times appear as correlated to the tech stocks, but that's actually disconnecting from any appearance to be connected to anything. And it is actually not correlated. It's a totally separate asset in a totally new asset class, has nothing to do with equities, which are driven by earnings and the health of the economy. Companies do well because earnings are the mother's milk of stock. As the economic environment improves for business, they're able to make more profit. That's what drives a stock. That's not what drives Bitcoin. Bitcoin is a monetary phenomenon. It is money. It's an asset like a currency and traded that way. But you could think of it as gold trades on exchanges as well. And what's it correlated to? Many would say that the closest correlation for gold is inflation. The theory is when inflation's going up, gold is the mitigating asset that will help protect you from inflation. So is Bitcoin. But Bitcoin is driven more by monetary inflation than it is driven by price inflation. That's not the topic of this video. My point here is you have a unique asset class that is screaming that, hey, I'm the asset class you've always been looking for. I perform well and consistently. I'm not correlated with the equity markets, which means you should pay attention to me. That if you're looking for an asset for a portion of a portfolio that is disconnected from equities, and therefore when equities are down, has at least a chance of being at a different point in its cycle, Bitcoin is your asset class. But here we are, 16 years later, the financial services industry, and I've been in this industry for so many decades, I know hundreds of financial advisors that I interact with each and every year. So I talk to advisors a lot. I'm very plugged into the industry. The industry is ignoring Bitcoin. Most financial advisors have decided to completely ignore it or to have a skeptical negative viewpoint on it. My call to action in all these videos on Bitcoin and digital assets is for you to want to learn more about the asset class. My goal is for every advisor to spend at least 100 hours understanding what is, in essence, a complicated asset class, but it's an opportunity. Complication means confusion on the part of the retail public. So here you have an asset that if you can become convinced it's a legitimate asset class and should at least be considered, now we're talking about something that as clients are more interested in this and becomes a part of the conversation in that clients are asking you about it, now we're talking about something where there's a fiduciary responsibility. So here we have Bitcoin, an uncorrelated asset. It has, for 16 years, outperformed the equity markets. It's the number one performing asset class over the last 16 years. It has been the number one asset class in 11 out of the last 15 years. And 2024 represented a huge leap in the adoption of Bitcoin in that there was institutional adoption that began happening on a very large scale. You had BlackRock and Fidelity and a bunch of big players set up ETFs. Bitcoin is now growing at an institutional level. There are companies every week that I read have become Bitcoin treasury companies. In that, the other thing that happened in 2024 is the accounting rules changed so that Bitcoin is now favorably accounted for on the balance sheet in that it's now marked to the market. So Bitcoin went from literally nothing in 2009. Now it's worth over six figures. And it's not just a fluke of last year or two. This has been a consistent asset class over the 15-year period that it's been alive. It should be taken seriously. My message to you in this video is I am waiting to see a headline that reads, financial advisor sued by client or class of clients. I think it could be a class action suit, but I'm waiting to see the headline where a class action suit against an advisor who is being charged by the client with underperformance of the investment portfolio and failure to even utter the word Bitcoin anywhere in the client relationship over however many years the client worked with the advisor. Mark my words, we will see this headline at some point. My question is, even if it's a hypothetical thought exercise, how would you respond? What are you going to say if you're sitting there in court? You have an asset class that's consistently performing 4 to 5 times better than the equity markets, but granted, at 4 to 5 times volatility, But if you take a running average of 5-year average annual returns since inception, you'll never find a 5-year period with a negative return. This is a volatile asset that if you're holding it for the midterm, 5 years at least, and when you purchase Bitcoin, the plan is to hold it for at least 5 years, then you have just done what most of us as advisors have been doing for clients with equities all these years, is get the client to focus on the long term. And when looked at in the long term, most equities that have had increasing earnings over the past decades, these are consistently appreciating assets. So there's my point of this video right there. I want you to spend 100 hours on Bitcoin. I hope you spend it with me. If you go to my website, themarkofmastery.com, I've created a new section on digital assets to keep the conversation going. I think advisors like you and me, we learn best by asking questions. So I've created a section in our website for financial advisors just to learn by getting their questions answered. When I was in the beginning looking at Bitcoin, my questions were, in retrospect, quite stupid. I actually understood the asset class pretty well. I understood the blockchain and how the technology worked. My big sticking point and my barrier to entry was I thought you had to have $100,000 to buy a Bitcoin. I didn't realize that you could buy $5 worth of Bitcoin. How dumb is that? But if I had a place like I've created for advisors where you could just go ask the questions that, frankly, the reason you're not looking into Bitcoin is because you fill in the blank. It's because you think it's too volatile, or you think it's using too much energy. It's bad for the planet. Isn't that true? If you can form your concerns into a question, now we're rocking and rolling. You're on track. I'm at the point where I've spent over 1,000 hours on the topic, and I want to help other advisors not be a party to that lawsuit. If a client starts to realize, and Bitcoin's adoption is growing faster than the internet did back in the 1990s, Bitcoin is growing fast. There will be clients who have never heard their advisor utter the term Bitcoin, clients who wonder why. Increasingly, as Bitcoin is in the headlines, if you fail to have knowledge of this asset class, it's going to be painfully obvious. So let's cut it off now. Come join us at themarkofmastery.com, or just read books. Jump on YouTube. There are lots of resources about Bitcoin. But go in with this perspective. You're not going to even venture a conversation with any Bitcoin owner about the topic until you have a minimum of 100 hours into the topic. The one thing that Bitcoin millionaires have learned to do very well is when they meet a financial advisor, they will give you a question, a quiz on Bitcoin, on basic topics, like what's the maximum number of Bitcoin that will ever exist? How is the Bitcoin network infrastructure designed? Or how big is a block of transactions in this thing they call the blockchain or the time chain? Or would you be able to answer a Bitcoin millionaire's question about Bitcoin halving cycles? And if someone were to ask you, how much does Bitcoin mining reward drop by percentage basis every 4 years? If you know the answer to that, you're on the track to being able to have a cogent conversation with a Bitcoin millionaire. And they are growing exponentially. All it takes to be a Bitcoin millionaire today is to have invested $1,000 6 years ago. Bitcoin has 10x'd 7 times over the last 16 years of its existence. Think about that. If somebody was in Bitcoin in the early years, they could have experienced a 10x growth of their assets 7 times. You do the math. This is a topic that, if you're not on top of it, will become a fiduciary liability quicker than you realize. I'm just trying to head it off at the pass, encourage you to start that journey now. Make a commitment to invest 100 hours in the topic. If you go to our site, I will keep posting videos. And if the minimum is 100 hours, which I'm saying that it is, you will have 1,000 hours of knowledge packed into 100 hours because the content that I'm creating for free is geared for financial advisors who have to understand Bitcoin from a fiduciary responsibility. We have a higher standard that we are held to. And even if you're not held to a fiduciary standard, we have an obligation to our clients. I hope you enjoyed this, and we will see you in the next video.